Hello traders, Mark Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is Tuesday the 21st of November 2017, and I just want to highlight a chart for you this morning. This is the hourly chart of the pound Australian. Some negative sentiment out of the UK this morning. Public sector net borrowing missed by about £1 billion, so that's negative for the pound. So that helps, but I just want to highlight this chart because it's a really nice example of understanding how market manipulations unfold and the order flow that follows with that. And when you see an area on a chart where price turns away from like that, a lot of people will believe that to instantly be resistance, but it's not the case at all. If you were a buyer down in here, right, and you were making money, and this was obviously, this is obviously traders making money, when it starts to turn and sell off and retrace, that's because those buyers are taking partial profits, right? Taking profits, that equals selling. So yes, it does mean that there is selling at the level, but it's not because there's people selling there wanting to push price down. They just want to take, those buyers just want to make some money, right? Bank some profits. But the rest of the world believes that that's actually resistance from any touch or any pivot on a chart. So price comes up to a level, turns away, and you'll hear people say that must be resistance because price couldn't get above there, and price pivoted away from there. Not necessarily, certainly not necessarily the case if you've got a trend prior to that. Maybe an argument for that in a bit of a ranged environment. And same again, from a support perspective, people instantly believe that that first touch becomes support as the first touch becomes resistance just because price turned away. Again, it's got to have some context. You've got to understand these previous market participants, the behavior of them, understand what they would do, and then you'll realize that that's not necessarily resistance at all. But what's important about that is the rest of the world thinks that it is. And what that does for us is that allows us to start looking at these areas to understand where a manipulation might start to occur. And this is just literally how one will start. Now, it's super valuable to place yourselves in the shoes of other market participants for these very reasons, right? Now, let's pretend none of this had occurred, none of that had played out yet, and we were at the hard right edge. Right, so it's basically where price is in the here and now. People will instinctively believe that that's resistance because it pivoted away from there, and as it comes back up, they'll look to sell, and sell they did. There's your negative price action that would have enticed the trader in to sell on what they believe now is a double top, right? A second touch. They go short, but importantly, where do they place their stops? Right above the level. Okay, just above the level in here. They're doing that because all the books and so-called gurus tell them to do that. They're trying to manage risk. They're trying to keep the stops small. It's a big deal, right? People tend not to like big stops, even though stops are just a function of your risk percentage. People tend to hate to have big stops, so they're trying to manage risk. They're trying to hide above and below these structures, so their behavior becomes very clear, and we can see them a mile off when they're participating in the markets. These traders believed price would follow through, so it's important to look back and place yourselves in the shoes of other traders and realize the behaviors and what they would likely do if they were to enter the market. Where would they place their stops? Indeed, where would they have some potential profit targets? Profit targets are not so powerful to understand. They are powerful to understand. I'll give you a quick example. But not in every circumstance. If you've got a range like this, and you've got a manipulation down this bottom end, right, and you believe that was a stop hunt off this level, then if you're in this type of range, the people who sold up there, to help understand that there should be some demand in here, irrespective of the manipulation, is these sellers will likely take profit on the other side of the range. So if they're sold up there, they must buy to exit. So it's just adding to the demand equation in here, plus the manipulation. So it's just a odds enhancer, if you will. But it's not important all the time. So in this, what's more important is, in this circumstance, is knowing where people place their stops, and they'll place them just above the level. Now you need this price to react off the level at these defined levels of support and resistance prior to a manipulation, because if price just followed through, let's pretend that price just follows through and then comes back and then goes all the way back up to the level, and you then think that that's a manipulation, you believe that that was a manipulation, but it's probably not a manipulation, because there's no negative selling at the level prior to what you believe to be a manipulation, which means these people who sold in here probably took profit on the other side of that range. So because of that, where's the stop losses? They're not there anymore because they bounced. Those traders exited. So if they exit, if price just goes all the way back through the level without any selling prior to the level, so basically it looks like this. You've got your level, comes back, probably everybody exited those positions, and rather than it sell off, rather than it doing that, it actually goes, just swans straight up through the level. There's no selling at the level as there would be in that situation, and then it sells off. That's not a manipulation in my book. You need the entry cheese, is what I refer to it as, the price action that tempts the traders in off the sidelines to take some risk. You need that entry cheese, that perception of the level actually holding to just prior to the actual manipulation. Otherwise, it's probable those traders who sold up in here have gone, and if they've gone, right, because they took profit on the other side of the range, if they've gone, then how is this a manipulation? A manipulation of what exactly? It ain't of stop losses, because there isn't any there. Do you understand that? See what I mean? So let me just clear this up, and I'll just show you again on here. So this is entry cheese, right? This is entry cheese. This is entry cheese. This is entry cheese. These are all versions of entry cheese where price looks as if it's holding as resistance and gives the impression that it's selling off, and this tempts traders in to take some shorts. Now all of those traders, where they're going to place their stops, they're going to place them just above the level, right? And those stops equal money. And if you're a seller, okay, those are buy orders, just sitting above that level. Now as price goes up through the level, those stops get triggered and that buy-in occurs, right? So this is a forced liquidation event, meaning those sellers at the level who were believing that price was going to follow through are now being stopped out at the level as price breaks up through the level. You're not only going to have people exit those positions by virtue of the automatic stop loss. You'll get people who maybe had stops, further away, but think, oh sugar, the market's broken, the level's gone. They're exiting it as well. So net it's still triggering buy orders, but those are forced liquidations. Now, if you're a big institution, you want to do some selling, you need a lot of buying to occur. Now, of course, we know where there's a lot of buy orders, right? Because of how this structure's played out. Now, importantly, on top of that, we don't just have that forced liquidation event. As price breaks up through a level, who takes a trade at that moment? What type of trader will trade a break? Well, that's a really bad example of a question mark. Who takes a trade as price breaks up through a level of resistance? Breakout traders. And who loves an entry on a pullback into prior resistance with the idea that price then becomes future support. Retracement traders on an engulfing entry candle, right? That's going to entice loads of buyers in, and net what is this doing? This is creating buy-in, but this is willing buy-in. These are happy buyers. Obviously the liquidation traders who were selling in here, they weren't happy about having to exit their positions or having to be manually automatically or manually forced out of the positions. These are buying because they want to buy, because they believe that structure is now dictating that the price will break to a new high. And no sooner does that happen, then the levels manipulated. But by the way, the levels manipulated in this whole process. The manipulation's happening in here, it's happening in here, it's happening in here, it's happening in here, because an institution, imagine an institution sees this level and they want to sell off this level. All they've got to do is do a little bit of selling at the level, and that's going to encourage others in to start to sell. So it's like a self-fulfilling prophecy. Then they can do a little bit of buying and then encourage his price again to the level, and then they just do a little bit of selling, and again it's just inducing and seducing the traders in. Then they pop it through the level again. They pop it through the level, but the self-fulfilling prophecy of that process means that breakout traders pile in, so it's cheap to do this bit of business. Again, some selling, manipulation, some manipulation at the bounce to encourage them in, and then they smash the level, right? And that's the manipulation. So that's the whole process laid out, and if you get some type of pullback, this looks like a decent place to take a shot. And if you'd like to come and learn how we do this in more detail, the different types of ways that this can present itself rather, click on the link below and I'll see you on the inside.